Hi, this is Andy Filipiuk in Toronto for the week of February the 12th. This morning, February the 14th, U.S. inflation numbers came out and they were stronger than expected. The CPI in the U.S. was expected at 1.9, it came in at 2.1%, and the core CPI was hotter than expected as well. The equity market futures were up about 137 points. They immediately dropped down to be negative 300 on this news. As I mentioned in previous videos, with interest rates starting to rise, the markets are now afraid of inflation. Now, the 10-year bond yield was at 2.82 before the news. It bumped up to 2.86. So the fear is that policymakers are behind the curve, that interest rates may have to go up because inflation is rising faster than expected. Now, the next level for the 10-year bond is about 303 to 305. So if we crack above that, it could be a very fast move higher. So this is what has equity markets spooked. It's important to note, with all the money that central banks have printed, this acts as kindling for inflation. And as pointed out in previous videos, the normal level for the Fed funds rate is about 2% above inflation. Well, inflation's 2.1% now, which means that a normalized Fed funds rate would be at about 4. We're at 1.5% currently. So if we get inflation, the fear is that the Fed may have to raise rates much faster than expected. And again, with all the money in the system, this could be a huge, huge problem. So it looks like we've got a new platform for trading. It's watch interest rates and watch what's happening with inflation. Thanks for watching.